Today, my name is Nellie Mulrooney, and I am the account manager that works on CAP Visual's account. I'm here from Assurance Agency to walk through your 2017 and 2018 benefit options for open enrollment. If you have any questions, please feel free by the end of this presentation to take some notes and get back to Lisa in Human Resources on those questions so that we can connect and I can help you walk through anything that you may have questions on. This year, CAP's Visual will be moving medical coverage from Blue Cross to United Healthcare. To eliminate any confusion with this, we do want to break down a couple things about this switch so that you understand exactly which dates, which coverages, and then also how these work in tandem as well with any savings accounts that you might have. You will have the choice of electing 3 different plan options. These 3 different plan options will be effective on November 1st of this year, rather than how it has been in the past of January 1st. You will have the option of electing an HMO, a PPO, or the high deductible plan that's tied to the health reimbursement account and health savings account, as well as this 11/1 effective date. Dental and vision coverage will also be moving to the November 1st effective date. All other ancillary coverages will remain on a 1/1 date basis, and those will be effective on January 1st of 2018. So as we go on, I will go ahead and walk through some specifics in relation to these dates, but I do want to give you a general overview of what we will be discussing. One thing I do want to touch base on to make sure that everyone understands what I'm referring to as I'm going through this presentation is that there is a difference between calendar and plan year. So the medical, dental, and vision coverage that I just explained will be moving to an 11/1 plan year, which will mean that those particular plans renew on November 1st, and they are not going to be on a 1/1 plan year effective date. However, any deductible that you have already met this year will be applied to this plan. And as of January 1st, your deductible starts over. So it is a little bit tricky because both of these items work in tandem of one another. So the calendar year runs as it normally would, January through December, but the plan year is a little bit offset by that, and it does not impact any deductibles as the deductibles stick to the normal traditional calendar year. All other coverages besides the medical, dental, and vision will remain on a January 1st calendar/plan year. So as we go through this, I'll continue to remind you of the differences between those, but I did want to make sure that you were aware as we began this presentation of what I mean about those two things. First, I want to touch base on is your medical coverage. So as I mentioned, one of the options that you do have for this coverage is the HMO. Again, this is in-network only. The only time in which you would go out of network for an HMO plan would be if you happen to have a medical emergency and you had no other options, and that particular hospital in which you would go to would have to recognize that it would be okay if it was an out-of-network hospital utilization. So the benefits I'm showing you here are in-network benefits only. Your copays for office and specialists are $20 and $40. Preventative care covered under Obamacare is mandatory 100%. You have no deductible on this plan for individual and family coverage, and your out-of-pocket max for individual and family is $1,500 and $3,000. After you have met your deductible, this plan does cover at 100%. You do have a $300 emergency room copay and an urgent care copay of $75. If you look below at the prescription drug benefits, the first section is looking at retail drugs, and those run at 31 days. The costs are different tiers that are based on how a pharmacy would code the drug. If you have a specific question about whether or not your drug falls into a category, please let me know, and I'd be more than happy to let you know exactly how much you'd have to pay for any routine maintenance drug. Mail order drugs, At the bottom, if you see the same tier structure of $25, $87.5, and $150. Again, if you have a question about whether or not your particular drug for either you or a dependent fall in a specific category, let me know and I'd be happy to look and let you know. The next plan option that you have the ability to choose is the PPO. This falls into United Healthcare's largest network, Choice Plus. Your office and specialist visits are $25. So these $25 and $50 copay is looking specifically at different tiers of specialist visits. And then your preventive care is at 100%, again, under Obamacare. Your deductible, you are looking at $1,000 for your individual and $2,000 for family. Your out-of-pocket max for individual is $4,000 and your family is $8,000. So this plan a little bit different than the HMO plan. After you have met that deductible, then it will cover you at 80%. So you are responsible for 20% of that. You have a $250 emergency room copay, and then it is covered at the coinsurance level, so you'd be paying 20%. And for the urgent care, you have a $100 copay. So the same exact prescription drug tier as the HMO is listed at the bottom below. And that you do have to select from is the high deductible health plan that is tied to the HRA and HSA. This plan can be a bit confusing for those of you that may have either not heard of it before or do not currently have this plan, but I would like to take a little bit of time to walk through how this plan works so that you have a better understanding of what to expect if you were to consider electing this plan. This plan is a hybrid of two different components. Your first component is the high deductible health plan, and that is tied to either the reimbursement account and or the savings account, which we will walk into a bit more detail next on that. The high deductible health plan is the first component that works in tandem with the other side of this, which is the reimbursement or savings account. A high deductible health plan is a normal medical plan that has a higher deductible threshold than many other traditional PPO plans. All of your medical expenses would be paid by you 100% of the cost, less carrier discounts prior to meeting that deductible. Once you've met your deductible, as any other plan works, that is the coinsurance and cost sharing kicks in which you are then able to have that plan paid for at that threshold. All expenses include doctor visits, specialist visits, trips to the emergency room or to urgent care facilities, and prescriptions. This high deductible health plan utilizes the Choice Plus PPO network, which is the exact same network of that PPO plan, which has the same doctors and hospitals. So if you are currently in that PPO and you know that you're comfortable with a particular physician or hospital, that would allow for you to then move into this plan with ease. Taking a look at the high deductible health plan's benefits, if you see, as I mentioned on the prior slide, that you do have to meet that deductible prior to the cost sharing to kick in, but once you have met your deductible, then 100% is covered. If you look at the deductible, your individual deductible is $5,000 and your family is $10,000. Your out-of-pocket maximum is $6,000 for individual and $12,000 for family. Emergency room, urgent care, everything else, you pay for that exact service at the cost at the time that you incur. And after that cost has accumulated from all of their trips, then you will not pay anything after that deductible reaches $5,000. The prescription drug benefit, you pay towards your deductible, then you would pay copays following that deductible cost. And same as the prior slides, you have retail and mail order, and those threshold amounts are the same. The HRA and HSA component is the second part of this, which can be a bit tricky to understand. To dive into it a bit more, an HRA is an employer-funded account that's designed to reimburse employees for any medical expenses. So that's the bare minimum that as expenses are incurred, you submit your receipt of purchase, your EOB, and then you are funded back for that. The thing about an HRA is that the employer sets up this account, they determine the amount of money that's available, and then establishes what expenses that you are able to utilize this account for. So employees are responsible for the first $5,000 towards that deductible, and then the HRA would reimburse back for the last $1,000. And then employees plus dependents are responsible for the first $10,000, but the HRA would reimburse the employee for the last $2,000. The HRA is tied automatically to your high deductible health plan and works cohesively as one with your plan. You may choose also, in addition to this HRA given to you through the high deductible health plan, to open this account to build a reserve of money for any qualified medical expenses you may have. An HSA, a health savings account, is a tax-exempt savings account that you fund with tax-free dollars. So from your paycheck, you can contribute into this, and it's used exclusively to pay for any qualified medical expenses or to provide savings for anything that may come up in the future. You may deduct dollars that you contribute to your HSA from your gross income, so overall you have lower taxable income and tax-free medical dollars for qualified expenses. Just to touch base on a qualified medical expense, the following bullet points below list out what exactly a qualified medical expense is. Medical services, procedures and treatments, any diagnostic service, prescription drugs, any over-the-counter drugs as well, vision, medical equipment, psychiatric care, assistance for disabled, orthodontia care, and general dental care, any long-term care premiums, Medicare co-pays, deductibles, coinsurance. There are many other things beyond just these, but these are the most popular questions in regards to what is covered. The link that is on the slide will take you to the IRS, and that has a very comprehensive list of everything in the event that you have something that you're wondering about that is not on the list below. In relation to the HSA, one new thing that is coming up this year is that CAPS Visual will be contributing to the health savings account if you were to elect that plan and you were to open a health savings account. The high deductible health plan does not automatically come with an HSA attached to it. You have to enroll yourself if you're interested in taking advantage of this benefit. CAPS Visual will contribute a maximum of $250 annually, and this money will go into your account in 2018 to coincide with the health savings accounts plan year. So as I mentioned prior, the difference between a plan year and a calendar year, the plan year of a health savings account, since that is its own entity, runs with the 1/1 to 12/31 plan year and calendar year. So the health savings account will not run from 11/1 up until next October 31st. So this particular health savings account, if you have one now, you will run this out through the end of the year and then automatically go into it again, but it does not change as of November 1st. The money that CAPS Visuals will be contributing this year will, again, as I mentioned, be a part of 2018 to follow that plan. Beyond that, you can contribute tax-free an additional $3,150 if it's for you only, and if you have coverage with dependents, you can contribute $6,500. However, we do want to stress that you cannot open this account with any other plan unless you are enrolled in the high deductible health plan. That is the only plan in which you are able to have a health savings account. Some eligibility requirements that are important in regards to the health savings account. You cannot be enrolled in another non-high deductible health plan. So you must be enrolled in a high deductible health plan. You cannot be enrolled in Medicare, and this includes Part A. You cannot be claimed as a dependent on someone else's tax return, and you cannot be enrolled in a medical FSA. That would include your own or someone else's. We are going to touch base in regards to the FSA in a little while. So if you have questions about these two accounts and how they work, we will get to that. But these are just the overarching aspects of eligibility. How much you can contribute into your health savings account. As I mentioned on the prior page, I did outline for you in relation to how much CAPS Visual will be putting in annually for your account, then how much you would be able to put in. But I did want to discuss overall the overarching amount that you are able to put in, which would be $3,400 for individual coverage and $6,750 for family coverage. Additional funding options for you if you are 55 years of age or older, but not entitled to Medicare, you are also eligible to fund an additional $1,000 a year as a catch-up contribution. If you're then looking also at the overall amount of funding, it's important to understand that contributions above that annual limit that is listed on this page is subject to any income tax and a 20% penalty. If you are planning to go ahead and contribute into your HSA account for the upcoming 2018 plan year, so you don't necessarily need to worry about this now, but I do want to make sure I stress that you will eventually have to re-enroll. We will be coming back to do a mini open enrollment session at a later date for that. But it is important to consider that at this time you are making the decision whether or not you're going to go into that high deductible plan, and this would play a role in that if you are interested in opening this account. Your election would not roll over from year to year, so this plan again follows the normal calendar plan year of 1/1 to 12/31. Another opportunity for you to use your money in a way to fund an account is through flexible spending accounts. Two particular flexible spending accounts that are available to you by CAPS Visual is a healthcare FSA and then a dependent care FSA. So the annual maximum that you are able to contribute into a healthcare FSA is $2,600, and the annual maximum that you can contribute into dependent care FSAs is $5,000. Only members that elect the PPO and HMO plans would be eligible for the healthcare FSA. If you're enrolled in the health savings account, you may only enroll in that dependent care FSA. You cannot enroll in the healthcare FSA. They both are separate savings accounts. Spending accounts. So in this case, you cannot have them working side by side. You could only select one or the other. For anyone who is in a healthcare FSA who would be interested in enrolling in the HSA, you would have to run out your unused funds prior to contributing to your HSA in January of 2018, and this includes that $500 rollover fee. Looking a little bit at the difference between an FSA and an HSA, the owner of the account is really one of the main differences between both. So the health savings account is owned by you. So if you were ever to leave CAPS Visual, which we would hope that you would not, but if you did, that account comes with you and it is completely portable from the medical plan that you have now. The FSA, however, is owned by CAPS Visual. When looking at eligibility, you are only eligible for that health savings account if you are covered by a qualified high deductible health plan. You cannot have any other health plan then that would cover the same benefits. So you are only eligible for that health savings account if you are in that high deductible health plan. And for the eligibility in regards to the FSA, that would be for anyone whose employer would offer that plan. So it doesn't matter if you are in an HMO or a PPO, you're eligible. The health savings account is funded completely by you through pre-tax payroll deductions, and then also the $250 annually that CAPS Visual is giving to that account. The FSA, however, is you through pre-tax payroll deductions, and that's all you would get in that account. CAPS Visual is not contributing money into that. You are able to utilize any unused funds in the HSA, and this money rolls over year after year, and it doesn't matter if you were to cap out every single year, then that builds on one another. Whereas the FSA funds are a use it or lose it type of strategy. So if you do not utilize all of that money that is given in that plan, then you don't get it and you don't get to keep it. Do you need to substantiate any claims for the HSA? No, because this account is IRS mandated, so therefore it's able to be audited, whereas the FSA, you would need to do so. For the HSA, in regards to limits, so for 2017, as I mentioned prior, what the limit for individual and family coverage is, and then that catch-up contribution if eligible. For the FSA across the board, whether that is individual or family, it is $2,600. Overall, looking at a general in-network plan comparison between all three plans, there's one main difference between all of the plans that I do want to take some time to review. One thing that we do want to stress with this is that the high deductible health plan, you do pay upfront 100% of the cost yourself up until that deductible, and then the plan covers it at 100%. So it's a very unique type of plan in that regard, whereas other plans have general copays. The cost sharing concept is still part of the HMO and PPO in a different way, but it is important that the high deductible health plan has a very strong consumer-based concept that you are shopping for what's most realistic for you financially, and then on the back end, paying all of that once the carrier discounts have been run through on those particular explanation of benefits. This is a general overview of the 2017 medical plan contributions. So again, this is for the 11/1 effective date of your medical plan. These outline biweekly contributions for the HMO, PPO, and that high deductible health plan. Next, we're going to take a look at the voluntary dental, voluntary vision, life, voluntary life, and disability coverage. So as we go through this, again, if you have questions, please take notes on those so that at a later date I can help to address anything that you have concerns on. This year, MetLife will be the new carrier for dental. So looking at the plan, we have similar plan design. You have the $100 individual deductible and a $300 family deductible. You do have co-insurance cost sharing that kicks in once you've met that for different tiers of coverage. So in the second level under co-insurance levels, you are looking at preventive, basic, major, and then also orthodontia care. At the bottom under benefit maximum, you're looking at the overall annual max on the plan and the ortho max as well. This plan is effective November 1st. So like the medical, it is effective November 1st and will run on a different schedule than how it has been in the past. Looking at the dental costs, these are the biweekly deductions. If you choose to elect the dental, depending on which coverage tier you elect, these are the costs of that particular plan. Next is vision. So vision will also be moving this year to MetLife. This is effective November 1st, as is the medical and dental. These are the copays and the out-of-network allowances for any particular service or item. Your frames, you are eligible for one pair for every 24 months, and you do get a $150 allowance for that. And contact lenses are one pair per 12 months, and that is a $150 allowance as well. This is an outline of the cost for biweekly deductions if you were to choose to elect the vision for what you would pay depending on tier for this line of coverage. While these coverages are effective January 1st, so they are not something right now to worry about, we do want to spend a little bit of time to review the benefits that you currently have in place. Cigna is your life and AD&D insurance carrier. All eligible full-time employees are offered one-time their annual salary to a max of $50,000 as a life insurance policy, and this includes accidental death and dismemberment as well, which is equal to 100% of the life benefit. This coverage is 100% employer paid, so you do not deduct anything for this. But one thing we do want to stress is that now is a good time to consider, and as is always, your beneficiaries. So if you have changes in this, we'll get to that later at a later date for exactly what you will do, but we do want you to consistently be monitoring your beneficiaries. You have the opportunity to elect for voluntary life coverage. Employees would be eligible to elect for the lesser of 5 times your base earnings up to $1 million. Your guarantee issue would be the lesser of 2 times your base earnings up to $150,000. Spouses and children also have the opportunity to elect for this voluntary coverage. Spouses are eligible for a maximum of up to $150,000 or 50% of the employee benefit in increments of $5,000. The guarantee issue amount for spouses is $25,000 if they are under age 70. Children are eligible for a maximum of $10,000 in increments of $1,000. This is 100% employee paid coverage, and if you are interested in purchasing coverage for your spouse or children, you must purchase coverage on yourself. So you cannot choose to elect for only your child. You must also have elected for voluntary coverage for yourself. Evidence of insurability would be necessary for amounts exceeding that guarantee issue amount and for anyone increasing life insurance outside of their initial enrollment. So again, this coverage will not be effective until January 1st of 2018, but we do want to remind you that this is something that is available to you and that at that time in a few months, if you are interested, that you do have the information you need to make the decision that's best for you. Insurance will remain with Cigna as well, and this line of coverage will be effective 1/1/18. So again, this is on a 1/1/18 plan year, which coincides with a traditional calendar year. Disability is in 2 different forms. CAPS Visual offers both short-term and long-term disability. So if you become ill or you suffer any injury that would prevent you from working, the benefits replace a portion of your income for a specific duration. Short-term disability benefits would begin after 7 consecutive days following a covered illness or injury. It will pay up to 60% of your pre-disability earnings to a max of $2,000 per week for up to 13 weeks. Long-term disability insurance begins after 180 consecutive days following a covered illness or injury and pays 60% of pre-disability earnings to a maximum of $10,000 per month until Social Security normal retirement age. A couple things about CAPS Visual, and for those of you that are on benefits and you're aware, then you would already know, but that we want to stress to you. The first is the employed spouse provision. So as an employee of CAPS Visual, if you are covering a spouse or legal civil union partner, you must indicate and attest to if that person is working and if they have medical insurance available through the employer that they work for. So if they do, the spouse and legal civil union partner is not eligible to be enrolled under the plan. The opt-out policy. So as an employee of CAPS Visual, if you would like to opt out of a medical plan and obtain alternative coverage, you will receive a $1,000 cash bonus for this. So you must show and be able to demonstrate evidence of other coverage every single year in order to qualify for this opt-out. And then also this cash is paid out over normal payroll periods that first quarter of 2018. So while the plan year is beginning now in November 1st, this will not be paid out until January 1st starting and then through that first quarter. So one thing about this provision that is important to know is that in the event that you do have a qualifying event and you need to enroll in benefits, the bonus would be repaid back through payroll deductions over 3 months. So let's say you do decide to elect for this opt-out and you do not have insurance on the medical plan, but you need it eventually for whatever reason that is qualified, then you would be able to repay that money back and be on the plan. Just a few next steps regarding your elections. So this year, something that's new that I know Lisa has indicated to you is that we will be using an online enrollment platform. So there will be no paper forms, no running into the office last minute with any kind of election change. Everything will be done online through Benefits Connect. Benefits Connect is an online enrollment portal, and I'm going to walk you through a couple steps of this so that you are able to see exactly what it will look like when it's your time to go through. This will also be utilized when it comes time at the end of the year to go through some of those additional ancillary coverages that are remaining on that January 1st plan effective date. So this page here is looking at the welcome page. So when you type in the specific user link, it will take you to this, in which case you will be able to access all of the benefits and everything that you will do to make your choices. This is the first page once you have typed in the information you need, which I have provided to you on the document when you came in. You will then provide security questions for yourself, and you will change your password so that you do not have the same one that everyone else in this office has. You then will go ahead and type in your personal information, and this is the information that the carriers will get since this portal feeds directly into their site. So your address needs to be exact of where you plan on your ID cards and all your other information coming to, as well as all the other information, demographic information about you. This next slide is walking through the dependents. So as soon as you have clicked next and you move on, this page is critical as it will basically open the door for what type of coverage you're going to have the option to elect. So for any dependents that you have, you must enter them in here as assuming that they're coming onto your plan. So if you have a spouse, if you have children, you need to add those dependents in that top section. One thing that is important to note about this dependent information section is that if you do have a spouse and you do have children, but you're planning on only covering yourself under this plan, so your spouse and children are on a different plan, you're only looking for employee coverage, then you will not add them in this portal. So the portal's built around the concept of once you've populated your dependents, it then filters out the options that are applicable to you. So if you only have yourself that you're covering, then you are putting just you on that section. For your beneficiary information, this is a good time if you want to update what you have on file to do so. You don't have to complete anything with that, but it is available to you if you feel that that's something that's important that you want to have edited at this time. Seen here is exactly what you'll see next as you go and make your election. So medical comes up, and this is an actual tester of my own test account for this. You can see on here that it does have your logo for CAPS Visual, and it outlines for you below your options for the plans. So when you go in here to make your choice, you will go ahead and decide first whether or not you are going to choose any dependents that you would like to add to this, which is in this first section right here. In this case, I did go ahead and click that I was going to add my husband, John, to my plan. And then below, if you see here, you have outlined in orange, and checked is the one that you are going to pick. In this case, this was automatically pre-populated when I entered the page, but I am going to actually elect the PPO. If I'm changing my mind and I select whichever plan I'm going to elect into, and then it also changes over here on this right hand side your general summary and the estimated total cost of your coverage. After this, then you're going to hit save to move on to the next. A sample page of what it will look like when you are going to search if you are in the HMO plan for your physician ID. In order to proceed through Benefits Connect, you must include the physician ID code on the initial enrollment page. Again, this is only for the HMO option. When you go to search for a provider within United Healthcare's network, the provider will show a physician ID number that should look like this number here. The last 3 digits on this you can disregard, as that's just used for coding. All you will need to do is enter in this ID number here, again right here, this ID number into Benefits Connect. I did not go ahead and click through the dental and vision because I figured that that one kind of sufficed for itself. But if you see on here, it does show you an overall enrollment in all 3 plans listed here with your total costs if you are to have a spouse or if you were to elect children as well on the plan. It's also going to distribute for you your entire costs overall for all of the plans. If you're happy with this and you're done and you think that you have everything under control, then you can go ahead and click Finish Elections. After this, when you click Finish Elections, it is important to note that that does not mean that you are then done. If you wanted to make a change beyond that later on, so 3 or 4 days down the road, you have the opportunity to log back into Benefits Connect and make that change. Once you do hit Finish Elections, if you are done and you do not want to make any other changes and that's it, then that will be your election that we will take and move forward to work with the carriers on. Important things to note that we've covered today. Your enrollment choices will remain in effect for the full plan year through October 31st, as long as you are an active employee at CAPS Visual Communications. So again, the enrollment choices you make on the medical, dental, and vision will remain in effect for that entire plan year. You're only able to make any changes through a qualifying event. Otherwise, you have to wait until next year during the same time for your open enrollment. So marriage, divorce, birth of or an adoption of a child, if you involuntary loss coverage, those would be reasons why you would be eligible to enroll off the cycle. Other than that, you cannot make a change. If you do experience any of these life-changing events, you must notify Human Resources within 30 days of that event. If you run into anything and you have any particular questions, please contact Lisa in Human Resources if you need any assistance. If it's something that she may not be able to answer or it's very detailed to you, she will definitely put us in touch and we can work together on coming up with a solution to the questions that you may have. If you have any questions, again, please reach out to Lisa and we can work to get those answered. Thank you so much for your patience with this and also for your attentiveness. I hope you have a great day. Thank you.